Good morning, traders, and welcome to a very special edition of the Pirate Traders live stream. I am joined today by André from Edgeful. Edgeful, if you guys will remember, is the software that I've been talking about recently, which is just kind of a way to give yourself insights about what's happening, with the market. So, André, if you could, I'll just hand it over to you. Tell us a little bit about your background and how you came up with the idea to start this, and so on.
Yeah. Thank you so much for having me. My name is Andre. I'm the CEO and co-founder of Edgeful. My background is in finance and accounting. I was an analyst. I apologize if you guys can hear my dog. Yeah, he's been barking a lot. But my background is in finance and accounting. I was an analyst at a hedge fund in Boston called Weiss Asset Management. I was also an analyst at Goldman Sachs for 2.5 years. I left Goldman, started to trade. And in my education, like while I was teaching myself how to trade and more of the technical analysis side of trading, I came across the concept of the gap fill. It's a very simple concept, very easy to see on a chart, very easy to measure. So as I did more research on it, I started to see that people kind of like talk about it as if the gaps always fill, which obviously nothing in trading always happens. So I wanted to see how often it actually happens myself. I have a very analytical background. I'm very comfortable with Excel. I have certifications. So what I did was I downloaded a bunch of data, threw it into Excel, and I started to parse it out. And I could see, okay, gaps up fill this often, gaps down fill this often. I can use this in my trading now. So I added more and more quote unquote reports to this Excel file until it kind of became this monster that I could no longer really manipulate. So I go online and I'm looking for something, a product like this. How often do gaps fill? How often are certain weekdays red or green? What days have the most volume? What days have the biggest range? And there is nothing available, which was extremely shocking to me because I know that there are a lot of tools out there. But that was the kind of like the founding story of Edgeful. And I was like, I think there's an opportunity here to build a product that shows people the probabilities and how often things occur. So.
Okay, that's cool. Before we dive into the software, I am very curious about your time at Goldman, as I'm sure a lot of people are, and just sort of the decision to transition your career from analyst, where you have good money, steady paycheck, it's very reliable, to risking your own money in your own trading. Where did that come from?
Yeah, so a quick summary of, I was in the asset management division, and a quick summary of what the lifestyle and like the work-life balance is my hours were from 7 a.m. to 3 a.m. every single day.
Oh my God.
Yeah. So just keep in mind, that's like 4 hours of not working every single day. So it's very much fire hose all the time. You're drinking out of a fire hose. The way that it works is they give you something, they give you an assignment. It takes 4 days. Realistically, it should take you 4 days to do it, and they make you do it in 2 days.
Yeah.
So you really won't have a choice but to continue working like around the clock because you know that you have this deadline. And then on the second day, when that first one is due, they give you another one.
Mm-hmm.
And it's just this never ending cycle of like, okay, yeah, you're doing great. Let's see what more you can do.
Yeah.
So it's for me specifically, I was dealing with clients, dealing with their portfolios, rebalancing their portfolios, like dealing with their other brokerages or their other wealth management firms that they dealt with. And then the analysis that we had to do internally for the markets themselves, what like sectors we were focusing on, what sectors we were going to recommend, and getting on client calls with like the actual clients with the advisors and trying to like recommend certain things, and they're asking us questions, going back and forth. So my background is pretty much in the investing side, and that's where like I had to learn more of like the technical side of like gap fills, and like they don't use gap fills, they don't use SMAs, they don't use a lot of that stuff because that's the investing side. So they're not really on the trading side. But it was an amazing experience because what I learned was to be able to work relentlessly with no breaks. And that's, yeah, it has really translated nicely into like every other piece of my life.
Yeah. Well, I'm sure now trying to start this business, you're working 18-hour days again.
Yeah. Yeah. There's no weekends, don't matter. It's like you wake up on a Saturday, you wake up on a Sunday, and it's like, oh, it's just another day.
Yeah.
It's like, what do I have to do today? And it does teach you a lot about how to just like work and be very productive, which A lot of people, I think now, I mean, not to go kind of like really off topic, but I feel like a lot of people now, they're able to sit at a desk, but they're
Yeah.
not very productive when they get there.
Yeah.
And being in that environment, you're forced to be productive because it's very cutthroat.
Yeah.
So, and then the decision to leave was, I was like, I can't do this. Like, it's not worth putting in the energy for like quote unquote like someone else.
Yeah.
And I was like, I'm confident enough in my skills to kind of like go off on my like on my own. I think that I can figure something out. And I've been obsessed with trading and investing since I was a kid. Like I've
Yeah.
had the paper trading accounts with Investopedia I've since forever ago. It's been something that I've always been interested in. So I was like, listen, this is something that I'm very interested in. I'm going to go and do that, and that's what drew me to trading itself.
Cool. Very cool.
Yeah.
Yeah, I mean that's exactly what I've always heard about Goldman is that it's like it's a churn and burn model.
Yes.
They find the youngest, brightest people straight out of college. They hire them and then they work them to death for a few years
Yeah. Yeah.
until those people leave and then they just bring in a new wave.
Yes.
Yeah.
Because they know that they have a stack of resumes like as tall as
Of
the
course.
Empire State Building
Yeah.
that these kids would die to go. And I mean, rightfully so. Like the money is great. It's very prestigious. Like your resume is stacked. Like it's an amazing place with amazing people.
Yeah.
It's, the learning experience, it's second to none in my opinion, and I do think that they are the best. I
Yeah.
mean, I have no affiliation to them now, obviously, but I
Sure.
mean, they are the best in terms of like what they do across the board. Like the culture there is something that is hard to explain until you're there. Like
Yeah,
the
yeah.
level of like you're surrounded by like A plus across the board. Like there is no B minus. There is
Yeah,
no
yeah.
B. There's barely
Everybody
even
is giving 110% all day,
yeah.
every day,
Yeah,
relentlessly.
exactly.
Yeah, yeah.
Yeah, exactly.
Very cool. All right. Well, let's dive into the software a little bit. So I'll just hand it over to you. You can kind of show the community. We got like 60 people hanging out. If you guys have any questions, throw them up in the chat and I'll ask him. But just give
Perfect.
us the rundown. What is the stuff that you're liking about it?
Yeah, sure. One thing that I'll say just before I go into it is please don't be shy with the questions. I'm here. I can answer them. We can go back and forth. We can kind of like elaborate on the questions you have and whatever you need. So please just don't be shy with the questions. I know that some people are just more reserved,
Yeah,
but not a big deal. I'll answer as many as you guys have.
sure. You guys heard that. Ask those questions. All right.
Yes. So I'm sharing my screen here. Can you see that okay?
Yep.
And should I make it a little bigger? What,
Yeah, the bigger the better. It's
okay.
taking up about 2/3 of the screen they're seeing. So
Okay. So is that better? I just don't know how this is how it's coming across on your side.
if you can go even bigger than that, that would be
Let's
great.
try
I think I'm
that.
seeing like your full screen. There you go. Yeah, that's good.
All right, perfect. So I'm going to start by walking you guys top to bottom, just how everything is laid out, just so you have a feel for the structure of how this platform works. So up here, we have the asset selector. So we have stocks, we have Forex, and we have futures. So right now we're in stocks, and for the sake of right now, I'm going to stay in stocks. Then we have the nav bar. Right here is the nav bar, and this is your steering wheel for the entire site. This is how you're going to navigate anything. There's like most of the buttons are going to be right here, and there are going to be very little buttons below this. So we have three different report types. We have price action, we have volume, and we have indicators. Right now we're within the price action report type. So when you click on the report, you're going to see all the reports that we have for price action. Then we have we're in stocks right now, obviously. So we have every single stock and ETF that you can imagine. And if you find something that we don't have, we'll put it in. Then we have our date selector. So this right here, these buttons are just shortcuts. So right now we're on the 1 year. You can quickly jump to the trailing 2 years. You can quickly jump to the trailing 3 years. And all the data changes dynamically, but we also have a custom selector. So if you want to look at, let's say, the Q4 of last year or the second half of last year and not consider this year, then you can do that here. If a report has any variance, you see them in the form of these bubbles here. So this gap fill report has 5 sub-reports. So it's the standard by size, by weekday, by close, and by spike, which I'll cover a few of them in just a minute. We always have a visual representation of the results, a table. We have an explainer graph and like an explainer image here. So in this case, like you can see what a gap up is, you can see what a gap fill is, you can see what a gap not filled is. We have a little more explainer text here. Then we recently just added trading view indicators. So all you have to do is click this button and request access to the trading view indicators, and we can assign them to your account, and you get all of them, all the ones that we have automatically.
Real quick,
So
what kind of indicators are those? Just to show what the gaps are and stuff like that?
yeah, so I'll just show you right here. In this case, let me just switch to SPY quickly. And let me remove this other one. So here you can see, let me just find a good example. Let me drop to the 5 minute. Let me find a good example here. Here's a decent representation just until I find a better example. Let me just make this bigger. I just realized it's pretty small. So you can see here we have a gap up, and it's indicated by this blue area. And then as the gap fills, the blue area lessens. So yesterday the gap didn't fill because you can still see that there's a blue area here. I'll show you an example of a gap fill. Here's a good example. And so right here, you can see there was a gap up overnight. So this yellow line is the previous day's closing price, which is the gap fill. And as price came down, the gap, like this blue area, shrinks. And then you can see that the candle that filled the gap was right here, indicated by the yellow box around it. So some people get confused. What's a gap? Where do I have to measure it? Like what's what? This indicator just shows you immediately what the gaps are, and it happens automatically and it happens live, which I imagine we can see live right now. Yeah, right here. So today there was a gap up and it's not filling at the moment, and I don't think it will. But so none of the gap filled right here, or I mean, partially it did. But this is what you can see live. So this is just one of the indicators we have, and I can go into some of the other ones too, as the reports come up.
Okay, great.
Yeah. So just keep in mind, these trading view, as soon as you're subscribed, these trading view indicators are like part of the package. So whenever you see them, and whenever we get new ones, you'll automatically get added. Then we just have some explainer text of like, what does this measure and how can I use it? And I mean, the text, if you don't want to read it, we also have a video. So the video will explain the entire report, how to use it, how to read it, and then a live chart example of how to apply this to your trading. So that's kind of a walkthrough top to bottom, how this works and how everything is laid out. Does anyone have any questions on that?
No questions so far.
Perfect.
They're loving it so much they got nothing to say.
Good. Okay, so I'll review a couple of the price action reports, a couple of the volume reports, and as questions come up, we can just continue. And if there are no questions, I'll just keep going. So I'm going to cover the gap fill report quickly. This is the gap fill report. We're looking at SPY and we're looking at the trailing 1 year. What you can see is that 62% of the time gaps up have filled and 59% of the time gaps down have filled. So all that means is, let's say Monday closes at 100, Tuesday gaps up to 105. Tuesday has to come down and touch Monday's close of $100 on Tuesday for it to count as a gap fill. If price doesn't touch 100 on Tuesday and stays above, that is a gap not filled. And here's actually a good example. So price opens and comes down to touch the previous day's closing price. And then a gap not filled is if it does not touch the previous day's closing price, and we don't measure gaps multiple days out. So this is very actionable, very day over day.
So real quick, let me just pause you for a second.
Sure.
We do have a question here. I already know your answer, but they're saying, can we adjust the gap fill or similar data to our own preferences? So there's not a way, I assume, to go in and reprogram it yourself if you wanted to use the previous day's high or low as a gap fill or whatever, but they can request that to you and you'll build it out for them, correct?
That is correct. And then another thing is that we're actually in the process of building out a complete customization. So the custom side of it. So some people like to use previous day's high as the gap fill. Some people like to use the previous day's close as the gap fill. We're actually building out currently the ability for users to select the inputs of the report.
Perfect.
It'll come standard templated, but you'll be able to select, okay, I want to use this or I want to use that. Like, for example, there's an ATR report that I'm going to cover a little bit in a little bit. We use the industry standard of the 14-day ATR. It's the one on any platform. When you open up ATR, it's standard 14 days. Some people like to use the 7-day. Some people like to use 15-day. Currently, you can't change that, but we're going to allow you to be able to change it.
Very cool.
Yeah.
All right. Sorry to interrupt you. Back to gaps.
No, no, good, good. I mean, if there are any questions, please, guys, jump right in.
Cool, cool.
Um, so here you can see that. So the way that you can use these gaps is to target that previous day's closing price as like it gives you the bias on the day. And what's interesting is that when you look at it by size, now here we're looking, these are the increments by size. So a gap less than 0.1% is obviously very small, so very, very high likelihood of filling. But as you go to the larger gaps, I'll actually switch to the dollars here. So for SPY, it's just easier to understand. Gaps less than $1, very high likelihood of filling. So a very small overnight gap. Then $1 to $3. So what you'll notice here is that as the gaps get larger, there's less likelihood to fill. So more continuation. The larger the gap, the more you should expect continuation, or at least not for it to reverse back down to the previous day's closing price. Something to keep in mind, a lot of people like to trade gaps, but they don't have the data to say, oh, there's a $4 gap on SPY, which is a huge move overnight. I'm going to target the gap fill, which is very rare to happen. So
yeah, it's funny. I have like a saying I always say to myself when I see a large gap, which I say, large gaps often don't fill on the first day. It's like a little reminder. This is the data that backs that up.
Exactly. That's exactly correct. Yeah. And the thing about this right now is we don't measure multiple days out. So yes, they can fill multiple days out. The reason that we don't, just so I can explain it to you and everyone watching, is that let's say there's a gap up on Monday that doesn't fill, and then now there's another gap up on Tuesday. Now on Tuesday, are you going to be looking at Monday's gap? Like, is that one going to fill today? And then also this one's going to fill today. Now, what's the data and how do we combine the data? So at this current moment, we don't want to make it more confusing. So we have it very standard of like, if it doesn't fill today, it doesn't fill today. And then we don't care about anything after that.
Yeah, no, that makes sense, especially for day traders.
Yeah. And then what we're going to add it eventually. It's just, we want to figure out how the interface, how it should be. So it's like laid out in a way that's intuitive.
Mm-hmm.
So yeah, larger gaps tend not to fill, smaller gaps tend to fill. Then what's very, very interesting is when you look at this by weekday. This is something that has helped a lot of traders and myself as well. When you look at this by weekday and you look at gaps down on Mondays for SPY, 95% of the gaps down on Mondays in the last year have filled. So what does that mean? When Monday opens below Friday's close, 95% of the time, price increases and will touch Friday's closing price. So having a bullish bias on a Monday with a gap down, targeting Friday's close, leaving runners to Friday's close, or targeting Friday's close can help you a lot, because Mondays are extremely bullish, as you can tell here. As you go throughout the week, you'll notice that each weekday has a pretty unique personality. Fridays actually tend to fill the gap in either direction, which is interesting. Tuesdays kind of are more, Tuesdays are kind of more like the 50-50 day, more than anything else. But Fridays are really that strong directional day in terms of filling that gap in either direction. Any questions on that?
No, that's no questions on that. But I will say we can talk about the average range and how that changes throughout the week as well.
Yeah, for sure. And I'm going to get to that report in just a second.
Okay.
After I just cover a couple more of these right here. So I'll quickly review. This report covers how often a certain weekday will close red or green. So you can see, I just said Mondays were very bullish. You can see 65% of Mondays in the last year have closed green. So very, like, you don't really want to be bearish on a Monday. I know last Monday was actually very bearish. That was an absolute anomaly day. And in trading, you want to catch the averages. You want to compound your wins over time. You don't want to just cross your fingers and hope for a home run day like that Monday, because it was totally out of character. So 65% of the Mondays in the last year have been green. The rest of the days don't really have too much of a bias, but it's just something to keep in mind. If there are any, this is the report to use. There's another one that I really wanted to show you guys. Previous days range. This one is very, very interesting. And this report was actually by request. So you guys can see this button up here. It says new report ideas. If you have any report ideas, we will build them out completely for free. So all you have to do is sign up, click that button, And if you have something that you like to see, I like to look at this, and like to look at across by weekday or whatever it is. This is my strategy. This is how I trade it. Can you build a report for me so I can see the actual data behind it? Yes, we can absolutely do that. All you have to do is click this, and it's completely for free. So this report shows for every day for every time the previous day's high is broken, right here, today closes green 77% of the time. For every time the previous day's low is broken, we close red also 77% of the time in the last year. So the previous day's high and low are very strong levels that you should consider for today's price action. If we break previous day's high, it is very likely that we close green. If we break previous day's low, it is very likely that we close red. So you don't want to expect this 23% to happen when we break the previous day's high. Of course, it's going to happen once in a while, but you want to stick to this side of the odds. You want to stick to the larger side of the odds so they're in your favor and you can make money over time. So this is a report that I find very interesting. And then there is one more that I'll show you here. And that is, actually, we can just jump to the volume report that you were just talking about. So this is another very interesting one. This is what you were just talking about for the ranges on different weekdays. What this report measures is the average volume indicated by the blue bars and the average range, which is the white line, by weekday. So you can clearly see an uptrend here as the week progresses. So this starts on Monday and ends on Friday. And you can see that Mondays have the lowest volume and the lowest range of any weekday. So what does that mean? Very choppy price action with low volume, not a lot of continuation, a lot of fake outs, and a low range means literally there's less meat on the bone. There is less opportunity for you to make money. So you need to be much more precise with your entries and your exits to catch a larger piece of that smaller move. So it's a lot more difficult to make money on the days that have the smallest range and the lowest volume. Whereas later in the week, you see obviously a lot more volume and a lot more range. And what that means is there's a lot more continuation. The price action is a lot cleaner to trade. There's not as many fake outs, and the range is bigger, which means there's a lot more meat on the bone. So the way that you can use this is to say, okay, on Mondays, I'm going to bat for singles. I'm going to bat for doubles. I will not go for home runs because historically they're not going to occur on Mondays. Those home run days just don't happen on Mondays for whatever reason. Whereas later in the week, those are the days where you can use maybe a little more size, or you can leave your profit targets a bit further out because those larger opportunities actually do happen on Thursdays and Fridays. So trading a certain weekday by its personality is what I've had an incredible amount of success with, and what all of our traders and all of our users have had great success with, because you don't want to fight against what the market is providing. It's an example that I like to use is if you wear a t-shirt and shorts in the summer, that obviously works. And you're like, oh, this works for me. I want to wear a t-shirt and shorts in the summer. But then as the winter comes along and you say, well, my t-shirt and shorts is working for me in the summer. Why is it not working for me in the winter? Well, it's a different environment. So you can't be stubborn and try to control the weather by saying, I like my t-shirt and shorts. It's the same thing here. You can't be stubborn and try to expect home run trades on Mondays because it's not the environment that Mondays provide. So adjusting yourself to that environment is what will give you the most success in your trading.
Yeah, I would also add to that with the t-shirts and shorts example is like, what this basically means, if the ranges are larger towards the second half of the week, if you're taking trend trades, so if you're taking momentum trades where you think the market is going to go further, you want to stay in those trades and let them run. Whereas earlier in the week, you'd want to take profits a little quicker. Don't fall in love with those trades. And with reversion to the mean trades, you should feel a lot more comfortable taking them on a Monday, closer to the edges of the range. Whereas on a Thursday or Friday, you'd want to be more cautious.
Yes.
So it's like, no matter how you approach the markets, understanding the context of that day can give you a little bit of insight, a little bit of edge.
Yeah, that's and very well said. And this doesn't mean don't trade on Mondays. This means understand the context of what Monday provides. And just to touch on options trading here, fun fact, this was actually the second report that I built in that Excel file, but I trade options practically exclusively. And what I found was Mondays were always the most difficult. And I always trade the weekly, that Friday expiration. And I always found that Mondays were the most difficult to trade. And I never understood why until I saw this report, because for options traders, you need that momentum, you need the volatility, and that time decay will kill you if you're sitting in a choppy garbage price action that even if you're slightly correct, even if it's inching into your favor, your premiums are likely dying because it's not moving with velocity. So it doesn't have the momentum behind it, which is going to juice up your options premiums, especially with the shorter expiration options. So a really favorable environment to trade options is actually from Wednesday on. And what I personally did what I do now on Mondays is I actually sell options. So I don't know how many of you guys currently sell options. It definitely requires some research before you go into it. But what I do is I sell 0 DTE SPX options. So what I'm doing is I'm taking advantage of the low volatility. I'm taking advantage of the lower range and the choppier price action, because when you just very, very boiled down, simplified version is I sell vertical spreads. When you sell vertical spreads, all you want is choppy price action. You don't want these giant moves. So when you can identify the days that have choppy price action, it puts you in like a very favorable position to sell options. There's actually something else that I'm going to show you in just a second here that kind of reinforces what I'm saying and why selling options on Mondays is great, or at least expecting a smaller range on Mondays works. Any questions before I move on? I think you might be muted.
Sorry, my mic was off. Somebody brought up the idea of back testing things, based on volume or cumulative delta, which just brought up an idea of something I wanted to mention, which is one thing that I'm obsessed with is recognizing when the behaviors of the market is changing, because it's constantly changing. And one thing that has been very cool about this is if I see some data point that's interesting to me, and let's say I'm looking at it over the last year, I'll then go up and change the dates to see like, what was it the year before, or what was it over the last 3 months, as compared to over the last year. And you can see how the behaviors of the market is changing. So, I mean, you don't really have like a back testing function, but the software as a whole is a giant back testing function as much as you want to take it back to see, what's been happening in that time frame. So,
yeah, I'm actually going to show you one thing right here. About the difference. So I'm going to show you this. No, what do I want to show you here? This one, green and red days, this one specifically. So over the last year, Mondays have been very bullish. But when you drop down to the 6 month, to the 3 month, actually, the majority of Mondays have been bearish. And you can tell now that we're in a downtrend currently. Now today's bouncing pretty nicely so far from what I've seen. I'm not sure what's going on currently, but
it's getting ready to roll over.
Yeah. Something that I like to do personally is I always like to look at the 1 year. My standard template, and we have it defaulted, is the 1 year time frame. But I always like to look at the more recent timeframes as well, because you get the most recent snapshot of what the current market environment is doing. So when you look at the shorter timeframes, you're able to catch that shift in the market environment before, well, not before, but as it's happening rather than after it's already happened. So looking at the shorter timeframes, keep in mind, of course, there's less data. When you look at the shorter timeframes, by definition, there is less data included. So keep that in mind. But I like to look at the 1 year, the 6 month, and the 3 month to give me an understanding of, okay, how has this changed? Is it consistent from the 1 year to the 3 month, or is it kind of like opposite, like what's happening now? So this can indicate a switch in the market environment.
Yeah. And if you have a strategy that's frustrating you, something that used to work really well, and all of a sudden it's just not working as much, you could go back, zoom in the data a little bit, and you'll be able to see those changes in market behavior and then say to yourself, okay, Mondays used to be more bullish, but now they're more bearish. Let me take that into account on Mondays from now on. You know what I mean? And kind of flip your mindset.
Exactly. That's exactly right. And the really interesting thing about this is we get a lot of emails and a lot of messages about, I can just screenshot this. Like what can I do about like why would I not just screenshot it? And what's really cool about this and what's obviously like beneficial to us and to the traders that stay on is you get the most recent data. And the data changes actually a lot more than you'd expect because we always use trailing periods. So what's happening is that every day, every time we add a day, we also drop a day off the back end. So now when you're looking at the trailing 1 year, now you're not looking at the old data. So you're only considering the most recent, like you just trail this time period forward with you. So you're not considering the older timeframes. You're not considering the old data. You're not considering the old market environment that's not relevant anymore. And you're keeping up with the most recent trends. So yeah, I mean, it's excluding the price that you can make the money, the cost of this in one trade, it's $35 a month. Excluding that, if you want to take trading seriously, paying for tools to help you develop your edge is something that, I mean, it's a no-brainer. This business is very difficult to succeed in, but to have tools that can help you, especially, I mean, we're not charging $500 a month for this. It's something that can help you understand, for the most part, I'm sure that even myself, coming from a background in finance that has a crazy amount of analytics background, I'm not able to do this myself. I would need to pay for a tool that can do this for me. So if you want to take trading seriously, I highly recommend, whether it's this or whether it's anything else, I highly recommend that you use tools to your advantage because doing it on your own and going based off of your emotions or your gut is not gonna work in the long term. I just want to say
No, no,
that.
I agree with that. It's
Yeah.
it's $35 a month might seem like, do I really need to spend this money? But if even one day, this things have changed, you get a new piece of information, and that helps you with one trade, you could make that money back. You know what I
Yeah,
mean?
easily.
Yeah.
Yeah, easily. Yeah. Especially when you're trading options or even futures, honestly. Um, But yeah, I mean, it's whether you use this or whether you use anything else, I highly recommend that you use the tools around you because it will only accelerate your learning curve and provide you more of an edge. I mean, I don't want to, obviously, like, I'm not going to promote any other company, but I think that you should definitely use the tools around you because they will benefit you for sure.
Feel free to promote the Pirate Trader live stream anytime you'd
Yeah,
like.
yeah, of course. Obviously, this is the best. I highly recommend everyone
Yeah, I'm just kidding.
try. Um, The last thing that I'm going to show you here relating to the stocks is the ATR report. This is a very interesting report because it gives you an expectation of what is the range that you can expect for today. How much meat on the bone do I have today? So ATR is just, you can think about it, not to go into the calculations, but you can think about it we only look at it on the daily time frame. So you can think about it on the average high to the low of the day, the meat on the bone. And what this report looks at is how often does price exceed the daily ATR? So right now for SPY, it's just around $6. How often does price exceed the daily ATR? So how often does it move from the high to low 650 or $7 or 625 or $8 versus how often does it stay within that range? How often does it stay below $6? So how often is the high to low $5, $4, $3, 550? And what you could see is that 63% of the time in the last year, price has stayed below ATR. So what that means is you don't want to set your profit targets outside of ATR. You don't want to set your profit targets at $7 or $8 for the high to the low. And this also helps you catch reversals. So like, yes, you can take a long trade or whatever, a trade in either direction, and then set your profit targets within ATR. But also if you didn't catch that entry to catch that move up, hypothetically, you can use ATR to catch a reversal for the way back down because you know that the high to the low of the day should be around $6. So once we're approaching that $6 mark, you can start to get short at resistance or whatever applies to your strategy. And now you can expect a reversion because 63% of the time, we're not going to continue up. Does that make sense before I continue?
Yeah, absolutely. Can you just really quickly throw up the futures? Throw up the ES?
Yeah, so we don't have it. We don't have it for futures just yet because, which I'll explain in a second. We are releasing it very
Yeah, probably
soon.
because you have to use a full 24-hour day. Is that
That's
the
exactly why.
yeah?
That's exactly why. So that's what we're trying to figure out right now is the 24 hours and how does the ATR work? Because we've built a custom solution to the futures, which I'll cover in literally just a second after I go into this by weekday variant of the report.
Okay. Yeah. I will just say to interrupt you even more.
Yeah.
With the futures, you should have both options. Have the 24-hour range and
Yeah.
the regular trading hours. All the traders that I know who trade futures really focus on regular trading hours as its own thing anyway,
Yeah.
the same as the stock market is open. So I would have
Yeah.
both options. But anyway, okay, carry on.
No, that's a great point, and that's the path that we're going down.
Mm-hmm.
So we just want to make sure that we accommodate both, but I'll go into that in literally just 1 second after I show you this right here.
Let's do it.
ATR, what you can see is that when you look at this report by weekday, you can see that Mondays have respected ATR 80% of the time in the last year. So we said Mondays have the lowest volume, the lowest range, and the highest confidence to stay within this daily ATR of $6, or which it changes over time. It changes every day, but of the daily ATR at the time. So now you have very high confidence of a certain range and of this, like a range bound day, which is for momentum traders. For like, if you want to hold a longer trade, this is not the day for you. And this is actually very favorable for options selling, as I was saying before, because now you can sell the strikes outside of ATR. And now you have extremely high confidence that that price will not like ruin your trade. Not to get into the technical details, but like it will not ruin your trade because you can expect it to stay within the range inside of ATR. Then what's very interesting is that as you go throughout the week, Fridays exceed this ATR, the daily ATR, 47% of the time. So these are the days where you can hold your runners. These are the days where you can set your profit targets a little further. These are the days where you can hold on to your winning trades because they tend to actually exceed that ATR. Any questions before I go to the futures?
Yeah. So just to reiterate what he's saying there is if you know what the average range is, you can know how to behave as you get to the end of it. So if you're in a trend trade and this is a Monday where 80% of the time it stays in the range, you'd want to take profits. If you're looking for a version of a mean trade, that's where you'd want to start looking to short or vice versa. You know what I mean? So having a context to understand what is happening throughout the day. All right. A couple quick questions here. One is when's crypto coming? When are they going to be able to look at Bitcoin?
So we are going to be including, I have a question, like a reverse question.
Okay.
Does everyone use crypto futures?
I don't know anyone that trades crypto futures.
Okay.
They all just trade the ETFs or the underlying.
Yeah. So the reason I ask is because we have the crypto futures, but we don't have the crypto data. We need to go and get the crypto data.
Yeah.
We can treat it very similarly to the way that we treat futures, which I'm going to switch to right now. But I was just curious if anyone trades crypto futures, because that's something that we can implement now. But we don't have the crypto data, which we're definitely going to include. We just haven't done that yet. But one caveat is that we're not going to be including the meme coins, obviously. Like the ones that are like parabolic, because like there's no data behind them. They're very new. So it'll be Bitcoin, ETH, Solana, XRP, like the mega caps in the crypto world.
Yeah, the top 10.
Yeah,
for sure.
What more questions?
So we got a question here. Can you use the data on a shorter time frame? So is there a way to look at data over 15-minute candles or 30-minute candles? Have you guys experimented with that? Like maybe trends over a certain number of minutes or anything?
So we do have specific reports for that. So we have the average, for example, this is a one-off example report that we have. And what this report shows is, on average, how many consecutive green or red bars can you expect? So on a 15-minute time frame, you can expect just over 4. I mean, in this case, you want to round down to 4. 4 green consecutive candles before you should expect a red candle. So you can use that red candle, that like quote unquote 5th candle, to either add or take profits to your position. So you can take profits before that other candle forms, or you can use it if you see that there's a really nice trend in a certain direction, upwards in this case. You can use that red candle to add before expecting continuation, depending on the momentum of your move. We also have it for the 5-minute, which is just almost 6 candles for the green candles here, and then the red candles are here. So it's roughly the same in either direction.
Yeah.
And we also have the 30-minute candles, which is just over 3 in both cases. Here we have the max for each. So what in the last year, the single highest consecutive streak of 15-minute candles is 15 for both. So this is like really the top end of what you want to expect. So if you do see like you're at 8 or 9, it's very unlikely that we're going to get to that 15 mark. So don't try to like stretch this trade more than what's expected, because this is the top end of what you want to expect. Like the most outlier day or the most outlier occurrence in the last year. So just something to keep in mind.
Cool. Yeah, that's valuable.
Yeah, another one that I'll show you, just which is kind of time frame specific. I know a lot of people like to trade certain time periods during the day. Like for me, for example, I only trade the first hour. If I don't get a trade within the first hour, so from 9:30 to 10:30, I'm going to walk away unless there's something like incredible that sets up later. This report shows you the average range within a certain time period that you select. So here we have selected 9:30 to 10:30 for SPY. And what this shows is that you can expect the average high to the low within the first hour to be $2.20. So what that means is, and how you use this is to say, I'm not going to set my profit targets $3 or $4 away within that first hour, because historically it's not going to get there. I'm going to take my profits around just over that $2 mark, because what tends to happen is that there will either be a bounce or a pullback that will wipe away some of your gains. The larger moves, that like full ATR of that $5 or $6 tends to occur over the entire day, not within that first hour. So if you are time restricted on your trading, or you just like to trade a certain time period, this report will help you to say, okay, well, for example, let's say you like to trade around lunchtime, which I don't know anyone that does that, but much smaller range, $1.50, $1.49 for lunchtime. So a lot less meat on the bone right there. So this is, I guess, kind of something that's more time frame specific, but I mean, I don't know. This is one that I thought might be helpful.
Very cool. Yeah. That is. And especially like if you're sitting in a trade in that moment and you're freaking out and you're like, can this range keep going? You could pop it open real quick and just see this time of day. Oh yeah, we normally get, a couple points here. It's okay.
Exactly. I actually built this report because I like to sell the vertical credit spreads. So I like to sell options between 1 and 2 o'clock. If I don't get an entry between 1 and 2 o'clock, I will not take the trade. So this one was actually not a request report. This was technically requested by me. I wanted to know the expected range from 1 o'clock to the rest of the day. So I was saying I want to sell the strikes outside of this range. So let's say that hypothetically, SPY is trading at $100. And I can see that the average range is $2.70. I can either sell the 103 calls or the 97 puts.
Mm-hmm.
In either direction, it doesn't matter. But I just want to sell outside of that range that's expected. Because when you sell options, you want them to expire out of the money. Mm-hmm. And that's it. So that's something that... that's the reason that I built this report, actually.
Yeah, that's actually a pretty good idea. I mean, so the average, I wonder, like, how often? So let's say right here, the average is saying it's $2.70. Like, percentage of a time wise, how many times is that? How many days of the week would it do that? Do you know roughly?
So we've actually gotten this. So when we show the average and then the max and the min, what we get is, well, what's the median? What's the 75th percentile? And we're going to start to add that in. The reason that we haven't is because optically, and like the way that our users look at this, is we don't want them to start to like look at this as a statistical tool, even though it is. Like, we don't want to start using like variance and standard deviation and like all these like stats words, because it might make it like a little more distasteful for people that are not familiar with what they are.
Sure.
Our solution to that actually is to make a basic and an advanced version of the site.
That's what I was just about to say. Have like a pro version for people who want the more complex options. Yeah.
Yeah, so that's something that we're going to do, and that'll actually fall into like the pure customization of saying I want it like my gap fill wants should be at the high of the previous day, or the ATR I want to be able to change it to 7 from 14 or whatever.
Hmm.
That's going to actually happen in the advanced or pro version of the site, where if you're not as familiar with all this stuff, you'll get what we like the basic, like the non-customizable, like templated stuff, which is very helpful, but not customizable. And then the advanced version will be where you can start to play with everything.
That's great. I think it's a good
Yeah,
idea. I
yeah.
support you
Thank you.
in that endeavor.
Yes, thank you. Do you want to jump to futures now, or are there any more questions?
No, and it looks like somebody from your team jumped on our chat and they're answering questions too, so that's helpful. Yeah,
Fantastic.
let's head to the futures.
All right, cool. So, let's look at this quickly. So, previous day's range. I'm just going to jump to this previous day's range report, and I'm going to make this a little bit bigger. So, with futures, everything is the exact same except one thing that is extremely important. We have a session selector here, and it is very important that you are looking at the correct session when you are trading. So, I'm actually going to switch to the micro here. And I'm going to hide this and show that and move here. Okay. So can you see this all right? In terms of like, is it visible?
Yeah, yeah. If you were to make it bigger, we wouldn't complain.
All right. No complaints there. Let me go on the 1 hour here. Okay.
There we go.
Perfect. So what you'll see here is the session selector. So with futures, they run 23 hours. So what we've done is we give you the ability to select a certain session to look at the data for. So right now we're on the New York session. And what that means is we are only looking at the data within the New York session. We are ignoring the London, the majority of London, and the entirety of Asia and the Sydney sessions. We're only looking at the New York session. So keep in mind, if you trade New York, you want to look at the New York, and then you could look at the daily. If you only trade London, then you want to be looking at the London timeframe, because what will happen here is it will look like this. So I'm just going to remove New York. I'm going to switch to London. And then what you'll be looking at is the London session now. So everything that I mentioned before translates over, but you need to make sure that you're looking at the correct session.
And day is the full day.
And day is the full day, is the entire session, correct?
Okay, great.
Yeah. So, and then the day would look like this, where you just go to the daily time frame, and then this is what you're looking at. Does that make sense?
Yeah, totally.
Yeah. So everything is the same. We do have some future specific reports, which is, here's an example of one. And this one shows you the correlation between the London session and the New York session. So in the last year on ES, every time London has closed green, New York has closed green 70% of the time. For every time London has closed red, New York has closed red 67% of the time. So when you're assuming you're trading the New York session, you're making your pre-market plan, you're waiting for the New York open, look at that London, how it closed, because that London close is going to be a very strong indicator for how New York will close. It does not mean that because London closed green that you just start longing New York. It means find an entry that is according to your strategy, and then you can have a very strong bias in a certain direction based on what happened in London.
Yeah, I would say across the boards, all this data, that's what it does. None of it is like enter a trade here because you see it, but it's all give yourself context to feel more confident in your trades, to know, should I get in it or not, more so than get in purely because, New York, because London was green or whatever.
Exactly.
That's important.
And yeah, absolutely. And I definitely want to like reiterate that we don't provide buy or sell signals. We are not saying buy here, stop loss here, target here. We don't do that, because I understand, and we all understand that everyone has a different strategy, and we don't want to tell you that ours is the best. There is no one single best strategy. It depends on how long you can be at the computer, what your account size is, and what your personality is. Like some people can't swing trade, some people can only scalp. They can't hold a trade overnight. Like it's all based on your personality. And like we're not trying to tell you what's best. We want to help you refine your edge and to build your edge for your personality and what's your like instinctually like inclined towards. So yeah, no buy and sell signals. This still means that like you need to find a good entry, et cetera. And like obviously what we want to do is make this as easy as possible for everyone to be able to find an entry, but there will never be a point where we're going to say buy here, sell here, stop loss here.
Of course.
So yeah. And just to touch on the other variant of this report, we also have Asia to London. So same concept. For every time Tokyo is closed green, London has also closed green 80% of the time. For every time Tokyo is closed red, London has closed red 70% of the time. So just something to keep in mind.
That's very interesting. I've never even thought about it in that context before.
Yeah, yeah. It's we have some other interesting ones coming for future specifically that will be very helpful in terms of from session to session. It's also very easy to visualize too, which is nice because you
Yeah.
can just see did the session close red or did it close green, and yeah,
Dope.
yeah. Any questions?
We got a question. Can you get overnight time periods as well? But yeah, so basically, if you had clicked on, your session being Tokyo session or London session, all the stats you see are from that time period.
Correct. And then I think that what that person is asking is, can we just get the overnight between, so like let's say you only trade the New York, and I'm not sure, I'm totally guessing right now, but if you only trade the
Yeah.
New York, then can I see from the New York close to the New York open, but not that regular trading hour session? We're also going to be including that, and that's going to be part of the um like the more customization that the site's going to have.
Sweet.
So it's able to complete custom session selection. So I know some people even like to trade the overlap between London and New York
Mm-hmm.
exclusively.
Mm-hmm.
Tends to be a lot of volume there. Some people like to trade that, and that's something that you'll be able to select. Okay, I want to trade this or I want to trade that. Like some people like to start their New York session at 8:30 instead of 9:30, and these are just arbitrary.
Mm-hmm.
So you don't want to have an entire list of like all the possibilities of what each session could be. So we're going to allow them to like the users to select um, whatever the session, whatever
Yeah,
session
it's so
is.
funny how trading is like, there's always another way to skin a cat or whatever that expression is.
Yeah,
Like,
yeah,
I know
exactly.
people that are obsessed with that London, session because it's like if it pivots right then, it can trend for like an hour straight or whatever, and that's all they look for is like a pivot right at that moment, and they get up early every morning just to watch it.
Yeah.
To each their own.
Yeah, no, I mean, there's a million, like you said, there's a million ways to skin the cat. Like in especially in this industry, it's there's an infinite number of strategies that people use, and we even have some requests that we're building out now, like stuff that I would never even think to has never even crossed my mind. But I mean, I don't judge. I don't care if they make money with it. Then who am I? I mean, it doesn't matter to me. We'll build it out. Like it could help other people too. So
Yeah, for sure.
yeah.
All right, what else you got for us? Anything else that's interesting?
Yes. The last thing I'll show you is the trading view indicators.
Great.
Just show you some of them here. So for example, I'll just hide this one actually. And then I will show you. So do you guys ever look at opening range breaks?
Yeah, is that like the initial balance, the first hour, or are you talking about the first 15 minutes?
Actually, both. Do you look at the initial balance? Because I can talk to you about that.
Yeah, we do. Look at that.
Okay, perfect. So I'm actually going to show you a report here quickly. Initial balance breakout. So I'm actually going to switch to stocks here for a second. And I'm going to show you the initial balance breakout. And what this shows is how often does one side of the initial balance break? So from 9:30 to 10:30, how often does one side break? How often do both sides break, which is less, 37% of the time? And how often do neither side break after it's formed?
Mm-hmm.
Only 1% of the time. So after that initial balance is formed, you should absolutely expect a break in either direction. Um, the other thing that I'll show you here, which is interesting, is that I'll just switch to the dollars here for the sake of this example. This, by extension variant, will show you how much on average will price increase from the high of the initial balance. So here from the initial balance, the top of the initial balance, you can expect $1.40 in addition to that, so setting your profit targets within that range of $1.40 is traditionally what you're going to get. Obviously, there are days that will just continue to run, but for the most part, whenever it breaks out of that initial balance high, you should expect around $1.40 of a move
Yeah. So
outside.
like if you were in a position, say it breaks the upper end and you're long, you might take partial profits there to lock in some
Exactly.
gains and then hold for the bigger move in case you get it.
Exactly. Sorry, I don't know what's going on with this thing right now. It's my trading view is not being cooperative at the moment. Let me just switch to SPY here quickly and see what is going on. Oh, because I'm on a higher time frame. Okay. So here, sorry, just to touch on some of these which I can switch this. It'll be relevant in a second. This is one of the trading view indicators we have. This is the opening range break, and this is for the first 15 minutes. So what you can see is it auto plots the high and the low of the first 15 minutes on every day. So you don't have to worry about doing it. And then what's really cool is that you have full customization on this thing. So if you can pick the start and end times. So you have 9:30 currently, but you can switch it to 10:30. And now we're going to have a separate indicator for specifically the initial balance. But now this is your initial balance range. This is your initial balance high and low because it's the high and low of that first hour of trading. And we have a bunch of other ones too. I can show you. I'll just remove this so we don't get this issue again. Oh, here, right here. This one shows you the previous week's range. So we have a report attached to all of the indicators we have. And you can see that in the last year, we've touched the previous week's high 67% of the time. And here you can see that this green line up here is the previous week's high. The red line is the previous week's low. This blue vertical line separates the first, like last week and this week. And you can see that now it's automatically plotted for you. You don't have to go and plot them. This updates over time. Every new week, it'll automatically change. And now you can target these areas according to what you see in the report. So that's another indicator we have. Let me just look through if there are any other interesting ones. Do you guys use pivot points at all?
Not really, but there's been a lot of talk about FIBs and the data around FIBs as well.
Okay. We don't have a fib indicator because it's just like a normal. I mean, we should have one actually that's a great idea. We should have one that auto plots on the previous day's range because we do have a fib report actually that auto plots to the previous day's range.
Mm-hmm.
And what this allows you to see is for every time we open between two levels based on yesterday's range, how often do we touch each of the respective points, each fib level?
Yeah. I mean, just looking at that data right there, click back on that screen again. It's like,
Yeah.
so if you're opening between the 0.5 and 3.8, you have like a 90% chance you're getting to the 3.8, 85% chance you're getting to the 2.36. It's like those numbers are eye catching, 90,
joke.
85% probability.
Yeah, no joke. Yeah, it's and this is the thing, like people say like, oh, I knew that or something. It's like this is stuff that you can't like even like from intuition, like you can't know. Like
Yeah.
it doesn't matter. Even if you're like, oh, well, like I know it touches like, but do you know the actual data behind it? Because even there's some stuff in here that even for pivot points, for example, not to like jump over to pivot points because you guys don't use them, but like this is a very similar indicator here, which like I'll just pull it up very, very quickly. It's very similar to the FIBs. And this just auto plots all the levels. So here you can see we've opened between pivot point and R1. And now all you have to do is click between R1 and the pivot point. And now you have like the exact percentages, which is very similar to the FIBs thing we just went over, of how often it can touch. So like don't expect it to touch R3 today. It only happens 7% of the time. Even R2 is a stretch, but we're getting there. So like maybe now that we're in this area, this is something you want to touch, but like, or you want to target, but like very unlikely that we're going to get to this R3. And what's nice about this is that this updates dynamically. So every time it's regardless of the range, it's regardless of whatever, these are the percentages and it kind of like averages out over all the larger and smaller ranges, which also applies to the FIBs practically exactly. So
Yeah, another tool for the tool belt.
Yeah, exactly. Um, what else? I don't really have too much else to show. I want to say that we probably have 10 more indicators that we're going to be releasing very soon. Um, this is I just had this up. This is the performance trends indicator. We also have a relevant report for it. It shows the performance for each week and highlights each week. The red boxes are negative weeks. The green boxes are positive weeks. We're going to be releasing probably 10 or so more TradingView indicators within the next 7 days-ish. So keep that in
Cool.
mind. Yeah.
Yeah. And I'm going to send you a list of stuff to start tracking. It's been one of those things like since the first time we spoke, I've been like, man, I really got to write out all these things I want because
Yeah.
I do want you to create some cool custom stuff for us.
Yeah, no, I mean, and we'll do it. So all you have to do is just click on this button. Or you can email me directly. I mean, I look at all those requests anyway.
Yeah.
But feel free. I mean, I mean, I'm not sure how much longer we're going to keep this for free. Just to keep in mind.
Yeah.
I mean, if you wanna do it,
As long as you want to keep doing 18-hour days is the answer.
yeah, exactly. Yeah, but we might not keep this free for that much longer. So I mean, I would highly recommend to take advantage now. I mean, obviously we'll build out anything that you want in the audience. Like, please just reach out. Don't be shy. And we can even flesh out an idea that you have if you haven't like fully thought it through. We're very experienced, like building concepts into reports. So if you say like, oh, this is what I like to look at, but I don't know how to like put it into a report, just even send us the idea and we'll put it into a report.
There you go. Yeah. I mean, I don't hype things. I don't promote things generally. I just don't like to do it. It feels icky to me, but I feel good promoting this because,
Thank you.
it's like you said, it's $35 a month. You sign up, you get a week for free. You get to play with it. And if there's just even one insight that can give you the confidence to get into a trade or can keep you out of a trade because the data doesn't line up, I mean, it seems like it's a valuable thing to play with.
Yeah. And the free trial it's risk-free. And something else that I'll say, which I don't say enough, is the cancellation is extremely easy. It is like a one-click cancellation. It's done through Stripe. It's not done through us. So like, Stripe is a huge company, a multi-billion-dollar company. So like, don't be scared. Like, try it out, get a feel for it, take advantage of the free trial, and don't stress about like, oh, they're going to take my credit card, they're going to charge me every month, because like that's not going to happen. You have control over it. It is a very easy cancellation process. So don't be shy about that either.
There you go. You heard it here first. Don't be scared. Give it a try.
Exactly.
All right, Andre, any final points you want to make before we call this one to close it out?
The only thing I'll say is, which I touched on briefly as we went through, is that trading with emotion is not going to help you. Trading with the data is what will help you. And if you think that you have a feel for it based on your emotion, and I mean, if it works for you, that's great. But over the long term, being in this game, having the longevity in this business is very difficult. And it's very difficult for your emotions to keep up with the most recent market trends. Might be stubborn into I was very bullish in November and I've had a lot of success from November until now, but the market might be shifting here. So the data is the thing that will separate your emotions from like the reality. And I mean, it's just impossible to make money in the long term without data. So, I mean, I don't want to say that, but it's realistically the truth. Trading with your emotions will never work over the long term. It might work when you FOMO into a trade or you want to trade GameStop or whatever. But I promise you, a lot of those people that traded GameStop do not have accounts today. Trading with data, going based on the averages, batting for singles, compounding your account over time, small wins add up. That's how to stay in this game for sure. There's no question.
You use the data to control your emotions to stop you from getting overly emotional. That's the trick.
Yeah, exactly.
So awesome. Well, thank you so much for doing this.
Oh, thank you for having me.
It's been awesome.
All right. Perfect.
All right. Well, I'm going to let you go. I'm going to close out the Zoom call here, and I'll just do some market analysis with them and then say goodbye.
Fantastic. Thank you so much.
Cheers.
Have a good one.
Bye.
Bye.
All right, folks, that's it. And you know what else that's it for? the momentum on the intraday time frame. Looks like we got cessation in the D period, so that trend is over, my friends. We are rotating. We did leave behind a poor high. Oh, yes, very poor high. So the question is, what is it going to take for the market to poke up and repair that poor high? Do we need to go sideways all day long and come back for it tomorrow? Or can we find support here today and head back up to take out that poor high? I would say as of now, because we haven't even backfilled the single prints from the B period, if they can find support in this node right here around 50.82, it's very important. They got to find support there, right at the lower end of the value area. They could absolutely come back up and poke through that high. So if I was getting long in there, I might only take partial profits at the POC instead of completely closing it out, because these poor highs, they love to get repaired. And on top of the fact that it's poor, it's literally reversed right at the base of those single prints from a previous day. So that's where those sellers were waiting. But what do those sellers want the market to do? They want it to head back down through the opening price. So if they don't get what they want, if the market starts to head lower and it finds support and it turns around and starts coming back up, all the sellers from the base of that single prints will start to get squeezed and the market can pass back through. So the market is rotational. I would not want to be a seller at the highs, as I think we may test that high once more after going sideways for a few hours here. All right, guys. Well, with that, there's not much else I can give you. I do think we're going to go sideways for a bit. I am looking for support somewhere between, 90 and 82 for a rotation back up to the POC and maybe even a new high. As far as what will happen at the high, we may just repair it and then run out of steam. We may just poke up there and then go back to rotating again. But any new buying above that C period high would increase the odds of another move to the upside. Remember, this is now a trend up on the daily time frame for the ES. 2 days in a row with higher highs and higher lows. So those longer term traders that have been selling are starting to rethink that here today. They're starting to think, do I still want to be short right now? So there is absolutely a chance that the market goes sideways for a little bit and then out of nowhere later on in the day, say, 1:30, 2 p.m., something like that, boop, 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 boop. It takes another run at the upside as we start to squeeze these longer term sellers. So expect some rotation and certainly be more bullish than bearish. Any final questions for me? John says, what is the red bar at the top? None of your business, John. No, it's just, I'm looking at it as a potential swing trade short. Going to wait and see what happens when we get there. All right. Thank you guys very much. You know the routine. I will see you tomorrow morning. And happy trading. Thanks a lot, guys.